All right, welcome back for another episode of Carnivore Trades. Today is Monday, February 27th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So really choppy action here for the markets. Market's still green here though. Spider's up 20 basis points and the Qs are up just over 0.5% here. Dow basically flat to positive, as is the Russell right now. But a little bit of a fade, right? So we gapped up this morning and we had a little pump action going on. And then Jefferson made some comments, Fed President Jefferson. Market did not like that. We came back in here and we just kind of chopped around, and now we're kind of fading a little bit as we get into the close. Market's set to close in about 15, 20 minutes here. So again, let's take a look here at the daily. And we have this trend line, which we talked about, and really everybody's talking about it, honestly. But the big point here is that right now, this is the type of action that bears want to see. So if you're a bull, you want to see this trend line here, and maybe the Pierce, maybe a close below it, which happened obviously on Friday. But you want to see a V shape off of this. And not only we're not seeing a V shape, but we're seeing kind of a gap and crap type day here. Maybe they can pop this up a little bit here by the end of the day, but this is overall not a great look. And basically what we're looking at here is possible, and a lot of the charts I'm going to show you today, you're going to see it, same type of pattern here, but we are starting to put in kind of bear flag type action. So we had this down move obviously last week, and we're just kind of going sideways here, and I think we're going to go sideways a little bit more this week. But you wanted to see a V shape, bulls wanted to see a V shape off of this, but if you guys watched the videos last week, you would know that we probably weren't going to do that because we had a failed pattern here. And again, closing below that yellow line, that's a weekly failed inside bar on the weekly time frame. Also losing that 50-week moving average. Same thing with the Qs. They did manage to hold that green bar low here, but gap and go below the 50 moving average there on the weekly time frame. And again, where did we go up today? Where do we go and test? Just to that 50 MA, and then we faded off that. Now, it doesn't mean we can't, trade up a little bit tomorrow here, but again, we're starting to see that kind of down move and just kind of sideways action here. So this market does look like it's trying to build a possible bear base here for a move lower. Now, again, we have a failed pattern on the weekly. Usually when that happens, the first level of support, once the down move starts, usually will get broken pretty quickly, pretty easily, I should say. Everyone's going to want to try and buy this back test of this trend line. I don't think it's going to work. I think we're looking at 385 to 386. There's also this pivot low right here at 387. And if we just draw in a fib here on the going back to the October lows, you can see there's a 50% retrace right in that 383 wheelhouse. So there's a lot of support in that area. And you got to remember too, here's the all-time high trend line. Here's the 382. We've already gotten kind of close to that. And if we bounce and start to base above that, this support will become more minor. So again, on this next push here, I'm not expecting 390, the 390 area, which has been a good pivot point over the last really 6 months. I mean, we go back to May, pivot, 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 all through December. This is a support area. I don't think it's going to be as important this time around, but for right now, market's kind of just hanging in there. I do expect a little bit more chop shop here. We do have an investor day Tesla on Wednesday, so that one's still holding up well, up 5% on the day, and it's still in good technical standing. Compared to the rest of the market, you have still technically a daily chart bullish inside bar consolidating beneath the 200, so that may want to bid up here a little bit into the investor day. Who knows what it's going to do after that. But another market leader, to move on here to NVIDIA, this is still up 1% on the day. So, holding, this kind of area here, this 230 area, which we talked about as major. I talked about this last week as well. It does look like it could be putting in an island. So we got to be on guard for that. If this 230 area breaks, we could see that gap get filled pretty quickly. But the semiconductors are holding up reasonably well so far. But again, we have the failed inside bar here on the daily, and now just kind of inside bar chop. So down move, if this continues to base more, it's going to be a pattern of weakness here. You could also make a case, it's a little premature, but Here's your kind of shoulder and then a head. And then if you come down here, it could be a right shoulder. So we'll watch that as well on the SMH. But NVIDIA looks very tired here. The rest of big tech outside of Tesla, obviously we mentioned the investor day, but the rest of big tech like Microsoft, I think this can be shorted on any sort of bear pattern. This is a weak chart here. This could probably wants to go down to the 233, 235 area. Apple's hanging on there. I did lose that green bar last Friday, but it's hanging on for right now on the weekly time frame. It's okay, but the rest of big tech, Google, this is not a good chart. Amazon, not a good chart here. Meta, gapped up today and now back below the 20 moving average. This should have gotten a bit off of that if it was going to continue higher. So the rest of big tech really weak outside of NVIDIA and Tesla. They're really kind of holding the market up at the moment, but either way, I believe this is all on borrowed time here. We are looking at a little bit of chop shop though, at least for this week here. Anyways, we mentioned the Qs. Let's look at the Russell. Again, same thing. So similar pattern here. Inside bar, red candle, and just sideways action inside of that. If this does more of that, this is going to set up for a move to 180. So Russell, which I told you guys really over the last month, I think this one's topped out already. It topped after the FOMC. Again, down move, inside bar, breakdown, and now another inside bar. So it's just taking the stairs down here. Russell not in great shape. The Dow, which is still fractionally higher today, went back up to that 331 area. And again, this one looks like it wants to go sideways as well after that nice breakdown on the weekly time frame as well. So a nice trend line there, outside week down. So Dow in trouble here. Really the NASDAQ, if you ask me, it's just being held up by Tesla and NVIDIA right now. And all of these things are just on borrowed time. Anyways, let's get over to, so we mentioned the semis a little bit. Let's talk about IGV. So cloud software here, fractionally higher. Still a weak name though. Again, not a great look here on an intraday basis. This is basically just hanging on to actually went negative. So a little bit of relative underperformance compared to everything else. And again, down move, and now just kind of basing in this area. We closed the week below this December high, so not a good look there on Friday. And again, continued weakness here. If this does more basing, this will go lower. First real level is around 270, but we'll have to see how long it bases here and if that can be minor or major at this time. But either way, cloud lower, or fractionally higher, I should say. Like most other things, let's look at the transports here. A little bit of a kind of lightsaber candle there on the daily. And again, similar pattern here, right? Red bar, sideways action here. We talked about that 15,000 area. We got to 14,977 on the day before pulling back. Again, more basing here. We'll take this thing lower. So we watching the transports, very, very important industry group. But again, that kind of pattern on a lot of these names here. All right, let's get over to interest rates, which Jim Cramer thinks is incorrect. I don't know if you guys saw that article earlier. Basically, he's saying that the bond market has it wrong, but it should be the first time ever. But either way here, the 2-year, let's look at the yield, actually hitting a new high. So since 2007, and this is a fake print still, but high of the day, 486.4, previous high 479. So 2-year yield futures taking out the highs. If we look at ZT, as we typically like to, again, we filled that rollover gap on Friday and now just kind of fractionally higher here today, up 6 basis points. So it's hanging in there. But again, kind of pattern is this: down move, sideways. This is setting up to take out that low. So the 2-year looks like it's heading lower. And, we've been talking about this ad nauseum here, but the NASDAQ has to catch up with this. By the way, take a look at where the 2-year is right now. It's basically a double bottom. So it's at the, it's at the lows, and look at where the spiders are. This is how much real estate is on the downside here. So you're seeing the bear case here. And that's why I've maintained that case moving forward. Doesn't mean we can't get bounces here and there, but this market is way, 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 way overvalued right now. Same thing with the 10-year. ZN, you're basically at that November breakout area. Spiders are way above that. ZB, 30-year, same thing. So, and again, down move, and now we're basing here. If this continues to base, we will push right through this pivot and, probably right down to this, somewhere in this. I mean, you're kind of basing above this area right now. So you'd probably have to look to, 120, that 120 handle there on ZB. But again, bonds continuing to be weak. Let's look at HYG. chopping around this area here in the lower range of this kind of bear wedge. We did close the week below it last week. Again, little oversold on the daily, so might have to do a little bit more basing. But again, bonds not in good shape. That is not good for the equity markets. Anyways, XHB. Oh, look, the same pattern. Down move, inside bar action there. So XHB setting up to go lower. ITB, down move, sideways action. ITB setting up to go lower. VNQ, little oversold here. Looks a lot like HYG. So wouldn't surprise me to get a little bit of a retrace here. But again, this gapped up today and couldn't hold the gap. It's up 10 cents. Very weak chart here. Tested the 50 moving average. If this goes sideways, it's going much lower. And it is starting to do that. XLF's going sideways. Inside bar action here after the rising wedge breakdown. Gap and crap, that is red on the day. Down just 1 penny there, but again, down in an up tape, so showing some weakness there. Let's take a look at everybody's favorite. Yeah, Credit Suisse hanging in there for now. Again, down move, inside bar. Not a good look here. So, yeah, I don't know what else to say here. XHB, rising wedge break. Tested the 20 MA and then came back in here. So this looks like it wants the 50 MA. You got this lower wedge here, lower wedge trend line there, up sloping. So that could be a possible target there on the downside. Again, this does need to base though if it's going to get through that, just like everything else. Okay, let's get over to crude here. So energy still holding below that 20 and 50. If this sets up with a bear pattern here, meaning more sideways chop inside of this down move, this is a short. Probably I would say to the 50, at least to $60, possibly even 50 on like a washout move here. But this bear pattern, this is a pretty good base here. There's a lot of supply it has to get through, so that's why it's taking a while. But crude, if this sets up a little bit more, I think this could be shorted down to that 60 handle at the very least. But it's hanging in there for now, so we'll just leave it alone until it tells us it wants to do anything. XLE here, so managing to scratch out a 20-cent gain currently. Oh, look, a down move and an inside pattern here. So again, even energy here, a little bit on the weaker side, showing that similar type of down move with that inside bar look on the daily, on the weekly. Again, still inside bar there on the weekly. For what it's worth, it's holding up much better. Over the weekend, I talked about XOP though. And if you guys didn't catch that video on Wall Street from Main Street's channel, basically what I mentioned is that you have, so this down move, a low, then a high, and then a higher low, and then a higher high. Now we've had a low again with this trend line and a lower high. So a little bit of momentum declining here on the XOP. Tells me it probably wants to break this area. So we'll be looking for that potentially in the future here. So energy may be starting to finally kind of spin its tires. But for right now, it's still a leading industry group. OIH here, really bucking the trend, up 1.5% on the day, reclaiming the 50 MA. Again, the important level, the one that matters, is this 308.31 level on a weekly close. If it gets below that, this goes back to 280 very quickly. If not, then it can get up to 2350. All right, everybody's favorite nat gas up 7% on the day, and we are above key resistance here. So 265, this is a major level that was resistance for really about 2 weeks. The same short seller kept hitting it right there. Also, lots of liquidations were being done, if you ask me. And again, we talked about this possible little rollover that would happen. That happened. It has bottomed now. If you guys take a look at the J contract. So that is the current contract here. Take a look at the volume there. That is capitulation volume. Take a look at the weekly. This is a 4-day week. Okay. Big time volume there on nat gas. Look at that weekly candle. Let's look at the monthly. We are 5 pennies away from closing the month green. Believe so, hard to believe, but that could happen tomorrow. Now we are going into resistance here. 278 will be resistance tomorrow. I would think we probably pull back off of that and maybe flag a little bit. But once this breaks, the short sellers are going to get squeezed, and this will get up to 375 very quickly. I know everybody's going to look at the 50 MA, 350 area, but the level I'm looking at a lot more is this 200-week moving average. That should get hit on a back test. Nat gas looks like a loose cannon ready to go off here. Just probably needs a little bit of, maybe a small pullback or some consolidation, flagging, etc., to get through that 278 area. But once the shorts start to cover, this is going to roll to the upside. All right, dollar index here. DXY, inside candle here, down 52 basis points on the day. And I say that, and the spiders are only up, 0.3% here. So again, spiders can't even get really much of a bid, even with the weak dollar here. And again, that tells you that the market probably wants to go lower here. Momentum's starting to fall. By the way, the market's been in a daily chart downtrend since February 2nd. So take that for what it's worth. But either way, we talked about this red bar. We go up into that. We'd probably need to pull back, probably need to flag. That's starting to happen here. If this bases, this will get probably up to that 200 MA. You got the 100 necktie up there. 107 might get there on an overshoot, a little bit of a pierce. Ultimately, I think the big resistance is up at 109, 110, and that is where I expect the dollar to go over the next couple of months here. So dollar index holding up well. Gold finally getting a bounce. Not up a ton, up just 40 basis points right now. If this can, take the previous day's high out and close green tomorrow, then maybe it has a shot to get up to these moving averages here. But again, still a little on the weaker side. There is a lot of support in this area, though. I mean, you basically based here for pretty much a whole month. So you'd expect it to at least give you some type of an up move. But again, gold, I do expect to go lower here over the next couple of weeks to months, regardless. Silver, on the other hand, a lot weaker. This one is starting to get attractive. Okay? Starting to get attractive. It's not quite to the levels yet. This needs to go lower. Let it get hit here. It might get a bounce. It's not going to go down in a straight line. But I am watching this one closely. Platinum had a nice bounce today. A really nice bounce, up 3.5%. I still think this one goes a little bit lower. I think it wants to test 875, but it did get a nice little pop today, so maybe it can follow through a little bit tomorrow. But ultimately, still just a lot of chop shop action here, really over the last week or so. But I do think the level is lower on PL futures for copper here. A little bit of a dead cat bounce, a little bit of backing and filling. It's not going to go down in a straight line, but ultimately, I'm expecting 375. So until that gets hit, I would avoid copper at the moment. All right, over to Bitcoin here, and there you see the 2-year with the new high there. That's a 14-year high, if I'm not mistaken. Bitcoin here, still holding up. But again, this is just a fascinating chart here. So you have this big kind of rolling top move that got negated with that big move. And now we have inside bar action here. So here's your low, here's your high, and you're basically, for the most part, inside of that bullish consolidation. We have a smaller power bar inside of that. That got closed below on Friday. And now we're inside of this smaller kind of red bar. So a little bit of kind of conflicting signals here. If this continues in this lower range sideways action, it could be setting up for a move down. But the bigger picture here, you have a bigger kind of up move that you're inside of. So which one will win out? Well, we'll have to see here. But for right now, Bitcoin's still holding on, still hanging in this range. If this starts to fail, though, it's going to go a lot lower pretty quickly. So, I mean, you'd have to hold this. You'll have a speed bump at, 21.5, that previous high there. But there's a lot of real estate all the way down to 18.5. And then ultimately to that kind of would be essentially a double bottom area. So, I mean, you did not build any support on this move up. So once this area breaks, it's going to go down just as fast. So just be aware of that. But for right now, if this, firms up a little bit, and there's the closing bell, obviously. But if this firms up a little bit, it still could get a squeeze here. But I think the clock's ticking, and I think it's running out of time, honestly. Same thing for the spiders here. If we were going to move up here, you really needed to V-shape today, if you ask me. And we did not do that. We gapped up, and the bulls couldn't hold the gap. Okay, we finished a little bit off the lows here, but not a great showing here. Bears wanted to see a little bit more of this chop shop action, and next leg down should come pretty shortly. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.